The price has been ranging for some time, bouncing between the support and resistance levels. Suddenly, the price starts moving strongly below the support level. This is our first clue that a breakout is happening, as this means we are looking for a sell trade opportunity. We don't want to enter a trade blindly. We need confirmation that the breakout is real and not just a fake out. That's where the MACD indicator helps us. When both the MACD line and signal line move below the zero level, it confirms bearish momentum, meaning the breakout is strong. I'll now draw a line at the support level so we can clearly see where the breakout is happening. If the price moves below this support level, I will take a sell position. This setup gives us a high probability trade with a strong chance of making big profits. And that's how we identify breakout levels like a pro. I've been closely watching the price as it moves near the support level. As soon as the price breaks below the support line with strong momentum, it's a clear indication that sellers are in control. This tells me that the market is no longer in a range. It's now starting a downtrend. Seeing this clear breakout, I immediately decide to take a sell trade, because this is exactly what we were waiting for, a confirmation that the price is breaking out of the range, not just bouncing inside it. I don't hesitate here, because trading is all about reacting quickly when you see a solid setup. Now that I've taken the trade, the next step is to manage it properly, setting stop loss, targeting profit levels, and ensuring we maximize our gains while minimizing risks. Whenever I take a trade, I always set a stop loss to protect my capital. For this trade, my stop loss is at the middle band of the Bollinger Bands. The middle band, SMA 20, acts as a dynamic resistance in a downtrend. If the price closes above the middle band, it means the breakout could be failing and buyers might be taking control. Setting my stop loss here ensures that I cut my losses early if the trade goes against me instead of holding on to a losing trade. Now that my stop loss is in place, the next question is, when do I take my profits? The MACD line, blue, and signal line, orange, help us confirm momentum. As long as both lines continue moving downward, it means the selling pressure is still strong. Once both move below the zero level, it confirms that the downtrend is well established, and I can lock in my profits before a potential reversal. I'm now looking at the MACD indicator, and I notice something important. The MACD line, blue, and the signal line, orange, have crossed over. This crossover usually signals a potential change in momentum, making many traders nervous. At the same time, I see that the price is attempting to push above the middle band, which is the 20-period simple moving average. This could make traders fear that the market is reversing, leading them to exit the trade too early with a small profit instead of waiting for a bigger move. After a breakout, it's normal for the price to come back to retest the breakout level. In this case, the previous support level, where the breakout happened, has now become resistance. The price moves back up to test this resistance level, but instead of continuing higher, it gets rejected and starts dropping again. This is a strong confirmation that the downtrend is still intact and that the breakout was real. Now that we've confirmed the price is rejecting the resistance, I will continue holding the trade. My next move will depend on how the MACD behaves and whether the price continues downward. The trade has played out beautifully according to my plan. I've already captured a significant move, and my profit has reached $800. The market is unpredictable, and it could reverse at any moment. Instead of being greedy, I'm happy with my gains and will close my position now. Always trade with a plan and take profits when you're satisfied. Holding onto a trade for too long, hoping for just a little more, can sometimes turn a winning trade into a losing one. This trade wasn't random or based on luck. It was based on a simple, effective strategy that you can use too.